Welcome to Facts Pro, where it's all about facts, financial, accounting, and tax strategies. Today, we want to talk about what happens between March 16 and April 15. So, what you really should do. Last week, we spoke about post March 16 deadline. The deadline for filing your business tax return has passed, or an extension of. Now, what do you need to do for your April 15? Do you need to file? Do you need to extend? What is the smart tax move in this situation? This is what we're going to talk about today. All right, so let me share my screen. And yeah, tax time is all about giving money to the IRS, and we don't want this to be the case. We always talk about being proactive. Do not wait till tax time when you just give your money to the IRS. Okay, so smart tax planning between March 16 and April 15, what do you need to know and do? What's actually due on April 15? Individual tax return, your 1040 form, or you file form 4868 to extend it for another 6 months. Your 2025 individual retirement account contributions or your health saving account contribution has to be submitted by this deadline in order for you to take it as a deduction on your tax return. The first quarter of 2026, the year we're in now, the estimated taxes of the first quarter is also due by April 15. If you are planning on filing an extension, that does not mean that you don't have to make any payments. An extension, extend filing, not payments. Okay, so what you should do, should you file now or should you extend? You file now if your books are clean, if your all K1s are in, if your all the forms that are coming from your pass-through entities, from your S Corps, from your partnerships, from your investments are in already, and if there are no corrections coming. But if that's not the case, then you need to extend. Extend if you're still waiting on some K1s because you cannot file without having all the K1s in order. If there is a major planning move coming, then wait for it and like retirement plan contribution or something. So if more time is gonna get you better result, then definitely extend. Extension doesn't trigger audit risk. Actually, sometimes it is the opposite. So don't be scared to extend. It's okay. But you just need to, the opposite thing is you just extend without having any numbers. So some people just want to extend without having the form submitted, without knowing what's going on, without having a clear picture of what, if they're gonna owe, if they're gonna have a refund, and that's not right. You need to at least have an idea of what is the situation gonna look like. So when you extend, you know what to expect because an extension is an extension of filing, not an extension of payment. Okay, so the key point again, it's that the extension doesn't mean that you don't make a payment. It's actually sometimes better to make a payment with extension. And if you, when you have everything in order at the time of final filing, you get a refund. That's better than if you're underpaying because yeah, your filing deadline, you move by to October 15, but your taxes are still due by April 15. If you underpay, you're subject to interest and penalty on what's owed. Definitely if you haven't paid enough taxes. So not always subject to penalty and interest. And in some cases, I recommend extension to some of my clients if I have everything they submitted. And if I can say that they wouldn't be subject to any interest or penalties in case they have cash flow issues, they're expecting some income to come later that will cover the payment due. So we need to plan it. We just need to have the information available in order for us to know whether it's you're covered for the year or you need to make some payment. Okay. So as we said, April 15 is the IRA and HSA deadline. The IRA, the individual retirement account contribution, is the last day for it is April 15, 2026 to take the deduction for 2025 tax year. It applies to both traditional or Roth. Of course, the Roth, you don't take the deduction, but you get reported in 2025. HSA contribution, same thing for your health saving account. If you have like a high deductible insurance plan and it allows HSA contribution, the last day to do that is April 15 to take the deduction because the contribution is pre-tax. Okay, deductible for 2025 tax return if you made it by the original deadline. If you extend, you can't take the deduction, by the way. Okay. The first quarter of estimated tax due April 15. So if you're a self-employed, if you're a business owner, if you're an investor, and this is and you're not paying yourself salary or so, and there's no withholding enough withholding of taxes from your W-2, then the Q1 estimated taxes cover your 2026 income. A big common mistake we see that if you don't adjust it for a higher 2026 income, so you keep it based on last year, but then you're not sure about what's your situation in 2026. And that's a very common mistake that people do not adjust and just keep things as it is, and they get hit with a big tax liability after. Again, underpayment triggers penalties even if refund is expected. So even if you're getting a refund for your 2025 tax return by April 15, that doesn't mean that you don't pay your Q1 2026. It doesn't work this way. So even if you're getting a refund, you may apply it to your Q1 estimated taxes, but again, depends on your situation, depends on whether if you're finding an extension and you're getting the refund late in October, it doesn't do the same as if when you skip just Q1 estimated taxes. So be careful with submitting that on time. And we talked about this before. USPS no longer guarantees same-day postmark. So if you drop it in the blue box on April 15, that's risky because they may postmark it April 16, 17. Who knows when they open this box? So a late postmark means a late filing penalty. So the safe option is really to e-file, 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 or hand delivery with postmark if you have to. Okay, common mistakes before April 15. Of course, when you ignore corrected 1099s and K1s, and that's also very common when there is like you have a stock market or you have whatever it is, and there is a corrected form. That happens after the original one is submitted. The original one was probably handed to you late January, beginning of February, but then they submitted a corrected one. They found a mistake, which happens all the time. They have a corrected form, they send it to you later, and you thought you already had it and you already sent it to your accountant and you forget about the corrected form. Very common mistake. So you need to double check on those. Skipping your 1099K that comes like from the credit card processing companies or the third-party payment processor, you do not skip those. So you need to have your books clean to find out and not to also double report income. So if income is reported on your 1099K and is also reported on your 1099 NEC, you need to confirm what is the right amount. So your books need to be clean. Your books need to confirm that if the amount is duplicated, you don't want to double report the income and you don't want to overpay. Not adjusting the estimates after a big income year, as we said, or if you're assuming that your 2025 refund covers your missing Q1 estimate, it doesn't work this way. So your checklist, first of all, to confirm all documents, 1099s, K1, corrected forms, decide if you want to file now or extend with solid payment estimate. And if you're extending, then calculate and pay by April 15. Maximize your 2025 IRA and HSA contribution. Even if you're extending, make the contribution by April 15 to get the deduction for 2025. Okay. Also, calculate your Q1 2026 estimated tax payment. Account for any new income that you're receiving this year. So when you are like you used to be a W-2 and now you're a 1099, or you're 1099, you used to have 100K, this year you're getting 200K. you need to account for this new income in your estimated taxes. E-file if possible, avoid postmark issues, and schedule post-April 15 planning. So with those who filed already with me and they're done for this year, and they say, okay, now what? I'm like, make it schedule a call with me end of like maybe May or beginning of June to start planning for 2026. Do not wait till it's too late. Okay, estimated tax safe harbors. So we said that you need to pay enough. So when is it that you pay enough? You pay enough to avoid penalties if you pay 100% of your prior year tax, and that's not the tax that you like the tax that you owed and you had to pay with filing the tax return, because that's not the right amount. When we say prior year tax, that's your prior year tax liability. This is the amount of taxes that was calculated that you had to pay for the year, regardless of whether you were in a payment position or a refund position. So even if you got a refund, that doesn't mean that you're good this year and you don't have to do anything. You need to pay during the year 100% of prior year taxes, or 110% if your last year AGI, adjusted gross income, was more than 150. That's number one. Or you pay 90% of current year estimated taxes. That's why we're looking for, if you're expecting a big year, a big like income year, then we need to find out how much is that. Whichever is lower, you can pay, and to avoid penalties. And that's the general rule. Okay, so that brings us to like that you have some room to breathe in, that you can feel more relieved that you at least have that safe harbor option. That doesn't resolve any cash flow issues. That doesn't mean that you wouldn't be subject to a bigger payment at the end of the year when you file actual, if you just choose that option and you had a bigger like income in the current year. Okay. So the key dates between today and April 15, today you start gathering your documents. April 10 is the final day to mail safely by certified. April 15 is to file or pay and pay or file the extension form. After this, schedule your Q2 and planning session. What to do this week? Gather all your 2025 documents, any 2026 corrections, schedule a tax strategy call now, and do not wait until April 14. If you have any questions, please reach out. I always do these lives, and I always encourage like the tax strategy analysis session to have if you have any questions about your tax situation. All right, I'll see you next week. Take care.